Everybody, welcome to the StockPickProfits.com live show. It is the last day of January, January 31st, 2019. We're ready for February. How'd you guys do in January? We closed January on fire. 5 trades for 100% or more in a row. So we took advantage of this V bottom that we hit from December 24th, right? And, if you've been following the live show, we kind of called it. We said that was a capitulation. We started talking about it right away. Positioning in good stocks, catching the rebound rally, and then making some nice quick profits, put some fresh powder in our pockets, and now we can analyze going forward. And we did just that, right? We did the monster trade. We did the monster trade. We did the Citigroup trade. We can actually go over this here with you. I'm going to pull up the exact numbers here for you while we're talking. So we hit that monster trade for 129%. We hit that Citigroup trade for 253%. That was in 8 days. The monster trade was in 5 days. We just closed out our Home Depot trade today. So all you guys that are following along, we tapped that out for 111%. That was in about 9 days. And we just came off that 150% off T, which was 7 to 8 days. And the WWE calls for 210%, which was about a month and a half. We went a little longer on that. We're also in that spider trade, and the spider trade is on fire also, too. We're up about 50, 60% on that. So we'll give that a little time to gel. So we're waiting to see what Amazon comes out with. It looks like it just released. Amazon beats on earnings and revenue, but gives light guidance. Stock seesaws after hours. Guidance is what it's all about right now with these earnings reports. So it's interesting. Amazon's down about $13 after hours. It was up $47 during the market. So I think I'd take that, wouldn't you? You go up $50 and you give back 20. That's not bad. You're still up $30. So all you Amazon shareholders, don't fret. It's just one day. But like we've been talking about, the strategy going into this, we got this incredibly painful sell-off, right, in November and December. And it was painful. December 24th, the worst Christmas Eve in the history of the stock market. But we had a plan, and we always talk to you guys about that, right? Always have a plan. Without a plan, everything is just lost. So you got to have a plan. It's got to be a good plan based on smart things, not on emotions and stuff. I hope the stock market's going to go up. I hope this stock I just bought is going to go up. Use your charts and use your technicals. Our members over the last 5-6 weeks have been doing just that. All our members are super chartists right now. They all understand Fibonacci's, how to set them up, how to use them, trend lines, some basic patterns, head and shoulders, inverted head and shoulders, cup and handles, triple tops, double tops, triple bottoms, double bottoms, you name it, they know it. And congratulations to all of them. It's been a very, very good January. We, like many traders, got caught in some option contracts in November that we had to eat, right? The market devalued so fast, and we talked about that. We had 5 in a row. They were good-looking trades until that fateful freaking November. And they devalued so fast that there was no way to save them anyway. So we had to strategize. We gave them a good chance. A couple of them claimed close, but they missed. So they ended up washing. But we got right back on the horse, analyzed the market. We saw that V bottom looking like it was going to happen. We picked the right stocks, 5 100% plus winners in a row. Now, it's all great. It's all great to dance and talk about wins and stuff like that. And you have to admit, five triple-digit winners in this market in a row is pretty good. And we're happy about it. But look, you're only as good as your next trade, right? So let's take a look at what we should do going forward. Now, we've been talking about it. We've been giving some trade ideas over the last few weeks. OBE was one of them for you guys that are looking for trades. The SOX, which if you'd gotten that, you'd be really, really doing well right now. And we talked about go with good stocks. One of them was Apple. We love Apple. It was dirt cheap under $150. We bought some for our retirement portfolios and stuff. And guess what? We're prospering from it. It was a great buy. It's a great company. That earnings report started this whole madness. We'll see how Amazon affects this going forward. There's a big meeting right now with President Trump and the Chinese representatives, and I guess they're talking about some important things. So we'll see how that turns out. That whole trade thing could really affect the way things go with the market. So, you look at that Apple trade, just that Apple trade, we were saying under 150, man, that's a buy. That's a screaming buy. In fact, we actually went through the options and we found a good option contract that we shared with the viewers. And that option contract right now is up about 14%. And it's all the way out to next January. Plenty of time for plenty more Apple move. And guess what? If you had bought that under 150, that was about $17 ago. Nice. Nice. Good job. You see how you do that? You can't let your emotions dictate your trading. And when you watch too much CNBC, when you watch too much Twitter, when you watch too much stock twits, your emotions get the best of you. Stick to your analysis and do your charting. And that's the best defense you have against your emotions, knowing what you're doing and having a solid plan. So going forward, we had this big rally yesterday, right? That was kicked off at about 2:15 with that Fed announcement. It just put steroids in the market. And we had a mixed day today with the Dow. The Dow, what was the final numbers here? We probably should talk about that, right? The Dow ended up down about 15 points, which is flat. The S&P was up 23 points, and the NASDAQ was up about 100. The VIX is now below 17. This is what we told you was your barometer from that December 24th day. Watch your VIX. The VIX has been on a slow trickle down. As long as it continues that trend, the market is still strong, and you should be playing the up. Now, of course, there's always going to be pullbacks, and you can make a little money on that if you're nimble, but we don't want to work that hard, right? We don't want to work that hard. We'd rather buy a stock or buy an option contract 6, 7, maybe even 2, 3 weeks later, cash it in for a couple 100%. That's how we like to trade. Some key numbers were hit in the markets today, but one just missed, and that was the Dow. The Dow closed at 24,999.67. Would have been a nice close over 25,000, but it's right there in that striking distance. But the big thing is the S&P 500 closed over 2,700. The NASDAQ closed over 7,200, and it's pushing 73. And of course, you throw in that VIX, and everything's looking good. So we got a little miss from Amazon. Actually, we got a nice hit on the earnings, but we got a miss on the guidance. Is that even possible? But the stock's down about 46, 37. It's bouncing around right now. Take after hours with a grain of salt, okay, gang? We trade during the market hours, so we don't really get into that. But I just want to kind of close the show with what you should be doing going forward, because I know a lot of you tune in for some good advice on how to deal with the market. So we've been ahead of the trade since we had this big sell-off, right? That sell-off, one thing it did was give us an opportunity to get ahead of the trade. What do we mean by ahead of the trade? Well, you're buying into softness, you're selling into strength. What does that mean? Buy low, sell high. But it means something even deeper. What is that? Well, buy when they sell when they buy. And so it's just like with this Home Depot trade. We waited till we had a little softness in the market. We knew that was the stock we wanted, and we went in and we got it cheap. Well, about a week later, we're cashing it in for about 120%. Same thing with the spider trade. We opened it up about 3 days ago. We told you guys about that. And we opened it up on a nice little red day. Why would we open it up when the markets are at their high? Be patient and wait for your point. And that's the point I want to get across to all you viewers, is stay ahead of the trade, okay? You don't want to buy into tops. You don't want to sell into bottoms. We told you that December 24th. If you were dumping your Apple in that about 2-week period, you were a fool. You were selling into a bottom. The stock's not going to zero. It's Apple. It's got $265 billion in their bank account. They're not going anywhere. They had a little bump in the road, and sometimes companies have those. It looks like the whole China thing's being resolved right before our eyes. So we'll see how that works. If you own Apple, you probably want to hold on to it. So look, let's kind of call it a show. You stay ahead of the trade and you be patient, okay? You make sure that you are very secure in your technicals and stay away from the emotions. Don't start putting out trades right after you watch Jim Cramer. Okay. That guy will get you so excited. Um, so yeah, let's call it a show. The market's kind of at an inflection point right now. So we actually saw some trades we kind of like, but we didn't bite into anything just to see how this shakes out. Amazon could pull the market down. It's Friday tomorrow. It's the Friday before Super Bowl weekend. There's also this huge vortex in the Midwest, which is crippling businesses, crippling people. People are freezing literally in the streets. It's scary. But there's a lot of this stuff going on. So why open a trade when the market's all is going crazy on a Thursday afternoon? When we can look at Friday and see if we get a little softness, maybe we get something we really want at a better price. And that's the way you guys trade it going forward. Keep it simple. Keep it very simple. I see a lot on the message boards, these complicated trades. Don't let your bias, your political bias, your whatever kind of bias affect your trades. We see it so many times. In this V rally, we've watched so many people on stock twits that just hate President Trump and they're rooting for the stock market to go down. Now, they might not really be playing it or not. They might just be talking out there, you know what's. But, they're all talking about, hey, this market's going to crash, this and that, this and that. Well, it hasn't. So if you're on that side of the trade, you really got your taken to the woodshed. But again, just because you don't like Trump doesn't mean that the stock market's going to go down. You're just hoping so he looks bad. And don't bring that into your trading. We trade the market. We don't trade politics. So look, this is the best January we've had since 1987 in the S&P 500. And if you didn't take advantage of it, shame on you. But the good thing is February starts tomorrow and more opportunity. So like we said, you guys go into tomorrow the same way we are. We've still got the GE trade going on. GE, how about GE today? All the naysayers, put them to bed, just like after Apple's earnings. Now look at GE's earnings and look at that stock. Stock was just rip roaring for all of the users that weren't paying attention. Well, we were paying attention because we own it. We still are carrying the GE. We're still carrying the spider trades. These don't expire till the 15th of March. So we're way out. We got a little bit of time. We can afford a red day. We can afford a little bouncy action. And that's the way we play it. We can absorb a little volatility. So tomorrow we'll go into it just so you guys that follow along. We'll take a good look at the market. We'll take a good look at what's developing out there with the trade and all that. And we'll see if we want to put anything on the board. And you guys do the same thing. Be very cautious, but don't skip opportunities because of fear. All right. So let's call it a show. It was a great day. It's a great January. Congratulations to all our members. If you want to be one of the members like ours, cheering 5 triple-digit wins in a row, coming off the worst December we've had in decades and all this crap, click the link in the description. And don't forget to read the disclaimer. Past performance is no indicator of future performance. We are not registered investment advisors. This show is for entertainment purposes only. Always consult a professional before making any investment decisions, okay? So good. Thank you for joining us today. It was a fantastic January. We are so looking forward to February. Again, look, if you want to learn from the best, if you want to trade with the best, if you want the support that you deserve as a trader, then you click that link. Schedule it, watch the video, schedule the call, find out what the program's about. It's no obligation. Other than that, we'll see you guys after the market tomorrow. Like I said, we're in the buying market right now. We just cleared out that Home Depot trade. We'll ride that spider a little bit more, and we'll ride that GE a little bit more. Other than that, we're sitting with cash in pocket, and we're looking for opportunity. All right, gang. You guys have a great afternoon. We'll see you tomorrow after the market.